Welcome to Tax-Free Money Secrets that put IRA investing to shame. Hi, I'm Dan Duran, and I promise that this strategy that I'm about to share with you is the absolute fastest way to accumulate massive amounts of tax-free cash so that you can be financially free. There is no faster way, period. Now, if you think about it, you and I are very fortunate to be in the know, so to speak, when it comes to investing our retirement accounts creatively. You see, most Americans are confined to invest in stocks, bonds, and cash, but not you and I. We know about using our retirement accounts to invest in such things as private lending, notes, and real estate. And we're truly blessed to do this because we can get higher returns and actually invest in something that helps the local economy. And more importantly, we can invest in something that we understand. Now, as you probably know, the typical way this is done is by what's called a self-directed IRA. And it works like this. First, we find a custodian who's going to hold our money for us. And then when we want to make an investment, we contact them. We tell them what we want to invest in. They make the investment as we direct, and they do it on our behalf. Well, technically, it's on behalf of our IRA. Now, this sounds good, but the process is actually fraught with problems, and this is where I come in. Hello again. My name is Dan Duran, and yes, that is my real name, and yes, that is my real hair. I've been a coach to real estate entrepreneurs for over a decade. Now, as a coach and national speaker, I'm absolutely passionate about the subject of helping folks to achieve their financial goals. No one that I know or respect is using self-directed IRAs anymore. That's really yesterday's news. See, all of my associates, all of my students, all the people I know who are on the leading edge just found too many problems with self-directed IRAs. For example, most experts agree that to have a decent retirement, you're going to need at least $1.5 million, probably more like $2 or $3 million when you count inflation and the long term. Well, that leads us to the very first problem of limited contributions. See, if you qualify, you can only put away $5,000 a year or $6,000 if you're 50 or older into an IRA. Think about that for a moment. Yes, it's true, we get tremendous leverage by operating in the real estate and the lending business, but how are you going to accumulate millions of dollars that you're going to need to be financially independent by putting such small amounts away each year? Pretty tough, don't you think? I mean, wouldn't it be great if you had a way to save way more than that? I mean, imagine for a moment if instead of putting, say, $5,000 away, imagine if you could put 10 times that away, $50,000 away. And then if you're married, you could double that to 100 or more. Well, keep listening. I've got some good news coming for you. Here's the bottom line. When it comes to your financial freedom account, and that's what I really consider all retirement accounts, bigger is better. See, the more money you have, the more deals you can do. Imagine coming across a great deal and you're just 50 grand short. Guess what? No deal. I mean, what could that cost you? The next problem with IRAs is income restrictions. You see, as bad as it is to have such paltry limits on the contribution, the government makes it even worse. They say if you make too much money, you can't participate at all. So, for example, for the tax year 2012, if you're single, you won't qualify for a Roth IRA if you make more than $125,000, and the phase-out begins as low as $110,000. Likewise, if you're married and you file jointly, you won't qualify if you make more than $183,000, and the phase-out begins at just $173,000. I guess this is Uncle Sam's way of saying, look, you're too rich to need a retirement account. That's just ridiculous. That's just more government interference in our lives. My goal is always to get beyond the grasp of this interference. Imagine if there were no income limitations, all right? Keep listening. Now, another huge problem with self-directed IRAs is all the fees. I mean, it's fees, fees, and more fees. Understand this. Custodians make their money by charging you ongoing fees. If you do this, or if you do this, they charge you a fee. And I couldn't believe it once when I sat down and looked at all the fees I had paid over the last 3 years. It was just incredible. I mean, there's a cash balance fee. There's the asset-based fee, the note fee. And don't ask about the fee because there's probably a fee for that too. I mean, it's not uncommon to spend $500 to $1,000 or more per account. And you usually will have multiple accounts, especially if you're married. See, custodians are very much like the IRS. If you do very little and have very little success, then, they don't bother you. There's very few fees. You kind of get lulled to sleep. But once you start doing a lot of deals, okay, you start to make a lot of money, your account balance grows, they really stick it to you. In fact, Gary told me that his fees on just one of his accounts had exceeded $5,000 a year. Isn't that incredible? The biggest problem that you run into when you're out there doing the business, though, is that these custodians can be very slow. You just can't take advantage of great deals if you're moving in slow motion. For example, it can take a week to 3 weeks to get a deal across the goal line. I mean, you deal with a call center person when you call up to beg your custodian for access to your money. I mean, anything out of the norm, they're just going to say no to it. So if you don't know what I'm talking about in this regard, you just haven't done enough deals. Trust me. You get something hot, they don't understand it, it's a no. Now, imagine if you didn't ever have to beg a custodian for permission to invest your money. Better yet, if you never had to mess with the mound of confusing paperwork that you have to send back and forth. I mean, stop upsetting the mortgage brokers and the closing attorneys and the escrow companies that absolutely despise dealing with self-directed IRAs because they never can make their commitments on time. I'll have the money there by Tuesday and it shows up on Monday. Not good. Wouldn't your life as a private lender or a real estate entrepreneur be so much better off if you could solve all these problems once and for all? Well, another problem that you've got with these custodians is they are administrators and they tend to make mistakes. I mean, to summarize, they're going to charge us outrageous fees. They're going to cause you as an investor to move real slow. But worse than all that, it's not uncommon to hear, horror stories about the mistakes they make. Now, my clients and I do lots of deals, so I got lots of stories, but I'm just going to share one with you. An investor that I know personally had a large note payoff, and they had a six-figure check that was sent back to the custodian. So be with me on this, okay? Pretend for a moment that this was you and it was your money. Also pretend it was about 95% of all the money you've been able to save in your retirement account in your whole life, all right? You made an investment. The deal finally pays off after a really long time. You've got this large six-figure check coming back. You're excited. Can you guess what the custodian did? They lost the check. Can you imagine? Now, the person assigned to the case mysteriously no longer worked for the company, and on it went. Well, anyway, after 3 weeks, it was a good resolution. They found the check, but come on, okay? Do you need this kind of angst? I don't think so. For this, you pay high fees, you beg them for access to your own money. I think there's a better way, and we'll talk about that in just a minute, but let's look at the last problem. See, IRAs can't do debt. Well, this is not a problem if you're in the private lending business. That's not what we mean by debt. But if you're ever going to buy real estate for your retirement account, you want to pay close attention, all right? First of all, you can't have recourse debt and use your IRA. It must be non-recourse, and of course, that's going to cost you a few extra points in interest. Now, you can do leverage debt transactions, all right? Even though I said you can't do debt. Here's why I say you can't, because to the degree that there is debt, you have to pay taxes on it. Huge, ridiculous taxes. It's called UDFI, and it stands for Unrelated Debt Financed Income. And your gain is taxable to the degree that you have debt. It's ordinary income, too. There are no such thing as capital gains inside of IRAs. It's subject to both federal and state income taxes. So, you see, it kind of defeats the purpose of being tax-free, don't you think? There's also limited asset protection. I mean, we live in a very litigious society. I mean, if you've been doing deals for years, odds are you've been sued, even if you do everything right. The IRA only recently got protection in bankruptcy in 2006, granted by Congress $1 million of protection. But they're not always protected in lawsuits. So, what's the solution for a private lender or a real estate entrepreneur? The most common, and by the way, an extremely high-risk solution, is what is called a checkbook IRA. It's where you actually end up with the checkbook for your IRA, sort of bypassing the custodian. Now, the checkbook IRA definitely solves the slow problem. I mean, you got the checkbook. You can move as fast as you want. You don't have to ask, Mother, may I, to get access to your funds. And, of course, it does reduce some of the fees, although it does increase other fees because you usually need an LLC to go along with it. Only problem is most retirement account teachers that I know advise against them. You see, understand the IRS attitude on this. The IRS regs say that you need a third-party custodian, and they're very clear on what that custodian has to do. They make you jump through the hoops because that's set up by the Internal Revenue Service. The checkbook IRS circumvents the whole thing, and the IRS specifically says you cannot bypass a custodian. The IRS needs to know that the IRA is being done right, and the custodians are all pre-approved because, see, there's no filing that the IRS gets with any IRAs. So custodians have all these guidelines and you're supposed to follow them. So I've attended several classes on these checkbook IRAs, and the bottom line is that those teachers that I respect all have the same attitude. They do not recommend the checkbook IRA due to the potential liability with the IRS. And speaking of training, other problem with the checkbook IRA is it normally comes in a 5-page application with no training at all. That's a very dangerous position to put yourself in, to run your own retirement account without being trained. You really need to know what's going on. The other problem, of course, is it still has many of the normal IRA problems like limited contribution, income restrictions, no debt financing without taxes, and very limited asset protection. So we went out and found the top IRS and accounting experts in the entire country to see if there was a better answer. And that answer has been sitting right in front of our face the entire time. And we solved it for ourselves, and now we want to solve it for all of you as well as for your OPM sources. So if not the self-directed IRA, if not the checkbook IRA, then what? Well, allow me to introduce the ultimate retirement plan. So why do we call it the ultimate? Well, some of the wealthiest individuals in the United States, we're talking billionaires with a B, use a plan just like this. And I can tell you that every wealthy doctor I know has one of these plans. And if you want to be wealthy, you should have one too. Let's see how the Ultimate Retirement Plan solves the normal problems with investing in a self-directed IRA. First, when it comes to limited contribution, as you can see from this chart, you can contribute almost 10 times as much to the Ultimate Retirement Plan versus an IRA. So if you're single, under 50, you see it's $5,000 for the IRA, $50,000 for your Ultimate Retirement Plan. A lot easier to get to millions if you can put in 10 times as much money, wouldn't you agree? See, if you're married and over 50, you can put in, with you and your spouse, $111,000 a year. I mean, that's just incredible. I mean, so many people who are so far from having enough money in retirement, you really have to, especially when you get into your 50s, be able to shovel a pile of money in there. And, of course, that's the way you do it. So, again, remember, bigger is better. If the average person needs $1.5 million for a decent retirement, how could you possibly get there at $5,000 or $6,000 at a time? I don't know how people expect to do it. That's why you need the Ultimate Retirement Plan. Now, if you look at this chart, it shows you a summary of the solutions of the Ultimate Retirement Plan contrasted to the IRA. Now, income restrictions, again, unlike the IRA, where if you make too much, you can't participate, there is no limitation. No limits whatsoever. See that? No limits. I like that. That's a really good set of words. As for fees, well, say goodbye forever to recurring fees. I mean, after the initial one-time setup fee, there are no regularly scheduled ongoing fees in the Ultimate Retirement Plan. You only have to manage updates every 4 or 5 years or so. Imagine setting up your Ultimate Retirement Plan one time and never, ever having to worry about those recurring fees again that you had with your self-directed IRA. As for processing time, you don't need anyone's permission. I mean, you're the trustee. You control the checkbook. You can move at lightning quick speed to take advantage of deals right now. And even when you do have time, you still don't want to have to ask anyone's permission to get to your money, right? You're in charge, and that's the way it should be, don't you think? Now, again, IRAs can't do debt without paying taxes, but the Ultimate Retirement Plan, if you set it up properly, can. I mean, some of the best deals need financing. And as we talked about earlier, if you invest with your IRA in a transaction that's leveraged with debt, it'll trigger taxes. And by the way, they're at 35% plus state income taxes. So that really defeats the purpose of tax-free investing. So for many, the ultimate exit plan, will be to buy, single-family homes, which is what I do, or apartment buildings, which is what I'm looking to do. Put those kinds of things in your retirement account, and then just live off of that money income tax-free. You can accomplish that through the Ultimate Retirement Plan, but you definitely cannot do it with any leverage inside of an IRA. You have unlimited asset protection from all lawsuits, including bankruptcy and the IRS. I mean, we live, again, in a litigious society. People are real easy to sue. You can do everything right and still be sued and lose it all or lose a bunch. I mean, can you imagine how bad it would feel to work for years to accumulate millions in your retirement accounts only to have them lost in some lawsuit? Now, again, remember, IRAs only have $1 million protection from bankruptcy. As far as creditors and the IRS, it's very limited. The Ultimate Retirement Plan, on the other hand, has unlimited protection from IRS, bankruptcy, and from creditors. And this protection was detailed in the ERISA Act of 1974. So we have a lot of case law, backing it up. So it's comforting to know that you're protected, with the strength of the Ultimate Retirement Plan. Now, here's a big problem for many folks. A lot of people just hate the idea when it comes to saving for retirement that you can't get to your retirement money until age 59 and a half. I mean, what if you have an emergency or something? Well, here's the solution. With the Ultimate Retirement Plan, you can borrow up to $50,000 for personal use, and you can take up to 5 years to pay that back. Now, this is something you definitely cannot do in an IRA. Remember, to pull money out of an IRA, this triggers not only the taxes, but also a 10% penalty. So it's like having your own private bank that never turns you down for a loan. Wouldn't that be great? Now, if you think about it, everything you've ever learned from a financial planner always says you need to have an emergency fund. Well, now you can save for retirement and set up an emergency fund at the same time using the exact same dollars. Also, I recommend that you replace any high interest that you have. I mean, a lot of investors I know use their credit cards to finance their operation. I mean, doesn't it just make sense to pay your retirement account all that interest and not some credit card company? And unlike the credit that can be canceled at the whim of a banker or some credit card company, you own this bank. You are in charge. There is no one that can ever cancel your credit. I mean, isn't that an empowering feeling? So let's just say you had a credit card debt at 18%. Well, just borrow the money from yourself and pay yourself that high interest. Same thing goes for financing a car, for example. Why pay interest to some bank when you could be paying it into your retirement account? And this is actually what I call a little secret of how to over-contribute legally. I mean, let's just say you're really good at saving and you max out your plan each year. Go ahead and take out a loan, even if you don't need it, and just keep that cash in another account that's ready to go back in whenever you do need it. Then you get to pay yourself interest each month, and in effect, you see you're actually over-contributing legally. Make sense? We've got all sorts of great strategies like that we can share with you. So get your own bank, get control of your finances. The Ultimate Retirement Plan can give you access to your retirement cash now, help you out for emergency funds, replace your high-interest credit, and allow you to over-contribute legally. So this plan is so cool, by the way. It has several features that we just couldn't find in any other plan. Quite simply, that's why we call it the greatest plan ever, or the ultimate retirement plan. I mean, for example, you can set it up to pay the tax now and get tax-free money later. A lot of people really like that. Or, let's say you got a lot of tax problems. You can get a huge tax deduction today and save now on taxes and just pay tax later when it comes out. Or, listen to this, you could do a combination of each. You know, some tax-free, some tax deduction. You get to decide, and you don't have to decide now. And you don't have to stick to that decision either, because each year, depending on your own unique tax situation, you get to change it. You're in charge. Isn't that amazing? I mean, it's all because, unlike with a self-directed IRA with a custodian, you are in complete control, and that's really the way it should be, don't you think? The bottom line is you can design the plan based upon your changing needs. So at this point, you're probably asking, all right, Dan, I probably need one of these things. How much is it? Well, my question is, what's it worth? I mean, in fees alone, you've probably already paid for it. Or if you're new to investing, in fees alone, you will definitely pay for it over and over and over again. So as long as you're going to pay for it anyway, shouldn't you enjoy the benefits of it? Now let's look at what it costs you if you don't do it. Let's just say you earned $100,000 investing, and you did it with cash outside of your retirement account. You pay 25% to the feds and just 6% to the state. That's $31,000 of money not working for you. Not just not working for you once, but not working for you over and over and over again. And just imagine the amount of money you could make off of that over time. And what if tax rates go up? It gets even more expenses. See, the few dollars it costs to set this up one time will pay you back dividends over the rest of your life. I mean, imagine how proud you'll be a few years from now when you've implemented a plan to do at least one deal a quarter in your ultimate retirement plan. And you look at your balance and it's in the millions of dollars. I mean, can you see that? How does that feel? What's that amazing feeling worth? So, you're probably saying, sounds great, Dan, but what about my special circumstances, my unique circumstances? Well, that's a really good question. Everyone is unique, and we really need to look at your specific situation and circumstances to see if this is right for you. And I mean, there's even some of you saying, hey, look, I don't even have enough money to pay my bills. You know, how can I think about retirement when I'm barely surviving in this crazy economy? Well, here's a common strategy. If you know you really want to start investing with your own ultimate retirement plan, but you're a little strapped for cash, but you do have an IRA account with a balance. Remember, the Ultimate Retirement Plan, you can actually borrow part of your account for personal use. So some will actually buy the Ultimate Retirement Plan. They'll transfer the funds from their IRAs into the Ultimate Retirement Plan. Then they borrow out the cost of the plan, and before your credit card bill comes in, you've got the cash to pay for it. So the actual net cost to you from a cash standpoint is zero. That's just one of many strategies we have to help you develop an abundant retirement account. But it brings up a really good question. Who should get an ultimate retirement plan? Well, anyone who's in the private lending or creative real estate, or who is thinking about starting that business. I mean, with the tremendous leverage we get in this business, it really gives us an unfair advantage over folks who have their investment choices restricted to just the stocks, bonds, and cash. Now, obviously, anyone who already has a self-directed IRA is paying those fees, or anyone who's been considering a self-directed IRA, it makes sense. And as we talked about earlier, you're already paying for it, so why not enjoy it? Also, anyone paying a lot of income taxes who wants a fast way to reduce them legally, like all the really super rich folks I know, they do. And anyone who's really serious about their retirement, and you need help, and you need to put serious money away, but you don't know, where to get that help. And of course, any business owner, or even those who want to start or expand their business, need to set up an ultimate retirement plan. And here's what we've done for you. We've created a serious help session. We call it a strategy session to help you figure out if this is right for you. I mean, this is real help now, okay? Not some call center overseas. This is a chance to make sure that this is right for you and to answer your questions about your specific situation. And you get a one-on-one with me or an expert trained personally by me. This is the real deal. It's a real offer of genuine help. So here's what we put together. Let me tell you how it works. You're going to click on the little red button below, sign up for your Real Deal strategy session. And once you've done that, you'll be asked a few questions, and someone on my team will contact you to schedule a time that works good for both of us. Again, this is real help. This is a genuine offer. And for many of you, it will be life-altering. And I know that because I've been told this time and time again by the participants. So take action, click on the little red button, and I look forward to speaking with you real soon. And by the way, for those of you who sign up for the strategy session, I've got a couple surprise bonuses for you. First one is in-depth training along with all of the frequently asked questions to get you prepared for your session. See, I strongly suggest that you go through these materials to make our call together much more impactful and much more valuable for you. See, the more you know before the session begins, the better decisions you'll be able to make about your financial future. And let me introduce to you our resident expert, Michael Hawes, CPA. Michael and I are the ones that do the training together, and you get to ask questions directly to us. His background is he's been a CPA for 34 years now, been involved in pension plan administration with clients for over 27 years. He's represented clients in over 800 separate purchase and sales of businesses and worked with over 3,000 business entities. He's represented clients in over 450 separate federal and state audits. He's led seminars for over 20 years to business owners, CPA societies, California Bar Association members. And the best part is, folks, he's a long-term investor in real estate and notes just like you and I. So the ultimate retirement plan is something that we all use. That's right. Michael and I use this plan ourselves, and so do our top clients all across the country. And it's something really special, and you are really going to love it. I've got another bonus for you, though. This is what's called Dan's Best Money Secrets, and these are the best money secrets I've been able to gather over the many years. Everyone knows you can deduct a traditional IRA, but you cannot deduct a Roth IRA. I will show you how to deduct a Roth IRA. Everyone knows you need to plan long-term for retirement accounts. You can't use it for short-term funding, things like college. I will show you how to fund college using your retirement account. And everyone knows you can't pull money out of a retirement account tax-free and penalty-free until you're 59 and a half. I will show you how to pull money out of a Roth IRA at the age of 1 day old. I know that sounds hard to believe. None of this is theory. I've done all of this. Well, my daughter is 13, and she can pull money out of her Roth IRA at the age of 13. Definitely worth coming aboard just to hear these secrets. These secrets could mean millions to you or a loved one. So how easy is this? It's real easy. Sign up for the strategy session and go one-on-one with me this week so you can plan out your path to financial freedom. Okay? Again, we're limiting this week to just 12 people. Again, how it works, you're going to click on the red button below for your Real Deal strategy session. Once you've done that, you're going to be asked a few questions. We'll contact you. Again, could be life-altering for you, so take action, click the little red button, and I look forward to working with you really soon so that you can achieve all of your financial goals on time. Let me tell you how it works. You're going to click on the little red button below, sign up for your Real Deal strategy session. And once you've done that, you'll be asked a few questions, and someone on my team will contact you to schedule a time that works good for both of us. Again, this is real help. This is a genuine offer. And for many of you, it will be life-altering. And I know that because I've been told this time and time again by the participants. So take action, click on the little red button, and I look forward to speaking with you real soon. And by the way, for those of you who sign up for the strategy session, I've got a couple surprise bonuses for you. First one is in-depth training along with all of the frequently asked questions to get you prepared for your session. See, I strongly suggest that you go through these materials to make our call together much more impactful and much more valuable for you. See, the more you know before the session begins, the better decisions you'll be able to make about your financial future. And let me introduce to you our resident expert, Michael Hawes, CPA. Michael and I are the ones that do the training together, and you get to ask questions directly to us. His background is he's been a CPA for 34 years now, been involved in pension plan administration with clients for over 27 years. He's represented clients in over 800 separate purchase and sales of businesses and worked with over 3,000 business entities. He's represented clients in over 450 separate federal and state audits. He's led seminars for over 20 years to business owners, CPA societies, California Bar Association members. And the best part is, folks, he's a long-term investor in real estate and notes, just like you and I. So the ultimate retirement plan is something that we all use. That's right. Michael and I use this plan ourselves, and so do our top clients all across the country. And it's something really special, and you are really going to love it. I've got another bonus for you, though. This is what's called Dan's Best Money Secrets. And these are the best money secrets I've been able to gather over the many years. Everyone knows you can deduct a traditional IRA, but you cannot deduct a Roth IRA. I will show you how to deduct a Roth IRA. Everyone knows you need to plan long-term for retirement accounts. You can't use it for short-term funding, things like college. I will show you how to fund college using your retirement account. And everyone knows you can't pull money out of a retirement account tax-free and penalty-free until you're 59 and a half. I will show you how to pull money out of a Roth IRA at the age of 1 day old. I know that sounds hard to believe. None of this is theory. I've done all of this. Well, my daughter is 13, and she can pull money out of her Roth IRA at the age of 13. Definitely worth coming aboard just to hear these secrets. These secrets could mean millions to you or a loved one. So how easy is this? It's real easy. Sign up for the strategy session and go one-on-one with me this week so you can plan out your path to financial freedom. Okay. Again, we're limiting this week to just 12 people. Again, how it works, you're going to click on the red button below for your real deal strategy session. Once you've done that, you're going to be asked a few questions. We'll contact you. Again, could be life-altering for you, so take action, click the little red button, and I look forward to working with you really soon so that you can achieve all of your financial goals on time.